Hey guys, in this episode, I'm going to go through 7 suburbs that may perform amongst the best in 2026 and 2027. I know that people are a little bit scared about interest rates in the next 6 to 12 months. Maybe they'll stay flat, but unlikely to go down. You might be thinking it's really hard to get a under 500K property in a capital city. We'll go through that amongst the 7 suburbs. You might be thinking that there's too much debt in the Australian economy, and so how can Australian house prices keep going up? We'll go through that as well. And we'll also go through the types of property that are likely to overperform against the Australian average in the next 12 to 18 months. One or two of these suburbs that I'm going to share are actually suburbs my clients are buying in right now. I'm not going to tell you which of the 7 they are because my clients will get angry that I'm sharing everything freely. But I do want to, as you guys know from years and years of content, I do like to give a lot of free content. So that's how I'm going to try balance it. But if you pick the best amongst these suburbs, you could well be making $100,000 or more in the next 12 months, with only needing less than $100,000 of capital to start with and a yield of above 5%. Really excited for this episode. Hope you stay right through to the end.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
So let's just address the elephant in the room first. We think interest rates might be rising in the next 6 to 12 months. Who really knows, right? But a lot of people will pause their investment journey because they think interest rates will rise, therefore house prices will come down. Well, obviously, that didn't exist in the last 3 to 4 years of interest rate rise cycle. But check this out. Australian house prices have consistently climbed over long periods, doubling 7 times in 6 decades, whether interest rates have risen, fallen, or stayed flat. The purple line is the composite Sydney and Melbourne property index as a proxy for national house prices, and it's consistently gone up. Of course, little wobbles from time to time, but that is despite or notwithstanding the standard variable rate, either it going up or going down. In fact, in 1988, the RBA official cash rate was 15%, but home values that year surged 31%. Of course, that's just a point in time, but it proves that a high interest rate doesn't in of itself mean a property price crash. And of course, the trend is right in front of you. Now, if we couple that with the fact that Australian population, which is now 28 million people, is expected to reach 31.5 million by 2035, that's adding roughly 4 million people over the next decade. Do you think property prices are realistically going to come down? I don't think so. That's like adding another Canberra every single year. Now, I'm going to go into the suburbs very, very quickly, but I know a lot of people who jump into the comments, they always say how we're so highly leveraged. But check this out. This is the percent of loans originated with an LVR of more than 90%. You could see that actually before COVID, this was a higher number. For owner occupiers, it was around 11%, and for investors, highly leveraged people that were investing into the market was around 4.5%. But fast forward to now, the owner occupier number is actually around 8%, and the investor number is around 3.2%. So despite house prices booming so much in recent years, people have actually become more prudent and more reasonable and more circumspect when they either buy to live or invest. The leverage story is very calm. It's not a huge risk at all in the Australian capital markets, banking markets, and housing market sector. Now let's go through the suburbs. I'm going to go through the data from Cotality. This is their best of the best report, which they released a few weeks ago. And you can see the change in home values year to date 2025. Right at the end of 25, they released this. The purple line is the 2025 number of house price growth, and the same period in 2024 is in the pink. Sydney grew more in 25 than it did in 24. 24, Melbourne did the same, Brisbane did the same, Adelaide was the opposite, Perth was the opposite. Hobart grew more in 25 than 24. Darwin grew hugely more in 25 than 24. Same with Canberra. And if you look at the regions, New South Wales grew more in 25 than 24. Victoria the same. Regional Queensland the same, which is surprising because it was already growing so fast. Regional SA was the opposite. Regional WA was the opposite, but still huge growth in 25. Regional Tasmania grew more than 25 than 24. Regional Northern Territory grew more in 25 than 24. And if you look at overall, capital cities, regions, and Australia in general, total cumulative, 25 was a bigger boom year than 24. So overall, what I take from this is that the market momentum is growing. It's not abating, it's actually growing. And of course, this was really helped by the most recent 5% deposit guarantee scheme launched by the Labor government in October 25. So we're going into this next 12 months with a lot of momentum behind our back. And I think what's really interesting as a preface, just before we go into these suburbs, is that the lowest 25th percentile of properties are growing the most. Okay, so the lowest is in yellow. These are the properties in 25 that grew at a capital growth rate on average of 9.5%. The middle ring, let's call it 750,000 to about 1.2 million. They grew as well, but not as much as the cheaper properties, which were under 750. They were around 8.7 growth in mid-market. And then the most expensive properties, which most of these old school buyers agents implore you to buy, those underperformed. Not only did they only grow by 6.2%, but those are the most negatively geared or the most negative cash flow. So if you buy in these areas that some of these archaic buyers agents with huge podcasts and followers buy in, you're not only negatively geared to the tune of 30, 40, 50,000 a year, but you're also underperforming. Go figure. Now let's go through these 7 suburbs. These are not only the suburbs that are likely to perform really well in the next 12 to 18 months, but they're the most affordable in capital cities right now, according to Cotality. So the first one is Gagebrook, if I pronounce that correctly, in Greater Hobart. You can buy something there for around $400,000. Then there's Herdsman's Cove in Greater Hobart for around $433,000. Bridgewater, Greater Hobart, $442,000. Risdon Vale in Greater Hobart, $480,000. Berrima in Greater Darwin for $488,000. I'm not going to go into that today. Russell Island, Greater Brisbane for $494,000. We'll go through that another time. New Norfolk, Greater Hobart for $496,000. Primrose Sands, Greater Hobart, $515,000. Lamb Island, Greater Brisbane, $518,000. We won't go through that today. And Clarendon Vale, Greater Hobart for $520,000. So the theme is Greater Hobart. Like, that is loud and clear. And it's so cheap that I fail to see how this momentum of the bottom 25th percentile of houses booming, growing at a double-digit annual growth rate, I fail to see how these affordable capital cities, remember, capital city suburbs, will fail to be swept away in that frenzy or in that momentum. So let's deep dive the Hobart ones real quick. So the first one is Gagebrook, and this is, as you can see, this is Hobart proper down here. So Gagebrook is north or a little bit northwest of Hobart. The next one, Herdsman Cove, is also in that same region. So you've got Hobart over here, right next to Gagebrook. So you've got that affordability pocket. The next one is Bridgewater. This is Hobart down here, and this is in that same little pocket. Then one that's a little bit distant from that area, but still north of Hobart, is Risdon Vale. And then you've got ones that are a little bit further out. For example, Clarendon Vale, it's more east of Hobart. And then you've got New Norfolk, which is far northwest of Hobart, and you've got Primrose Sands, far out east of Hobart. So the ones that I'm really interested is in Gagebrook, in Herdsman Cove, in Bridgewater, and Risdon Vale, because these are the closest to Hobart. Now, just because something is affordable doesn't mean it will boom. For those of you invested or know Brisbane, it was affordable for 10 years, 2010 to 2020, and it grew 18%, not much at all, despite being very much cheaper than Sydney and Melbourne. So affordability by itself is not a growth metric, but of these locations, there are 1 or 2 that my clients are buying in where the data is all lining up. Things like stock on market, days on market, building approvals, affordability ratios relative to income, not just on an absolute price point perspective, looking at infrastructure, looking at zoning changes, looking at how incomes have been growing relative to the state average. We look at 30 to 35 factors. So of these, there's only one or two that we've really honed in on. But if you do your own due diligence, you'll be able to find the best of the bunch. But there's something in being close to a job center. Now, close to a CBD does not make a difference in terms of long-term capital growth. It doesn't matter if you're 10 Ks from Sydney CBD or 30 Ks from Sydney CBD. Same in Melbourne, same in Brisbane. If you look at a chart, which I've shared before, the proximity to the CBD does not matter for capital growth prediction. What does matter is proximity to job centers. And in Hobart, the main job center is close to the CBD, whereas in other cities that are larger, there's multiple job centers scattered around, and therefore the main CBD isn't a huge correlating factor. So the ones that are closest to Hobart in this instance are Gagabrook, are Herdsman's Cove, Bridgewater, and to some extent as well, Risdon Vale. So those are the ones that I'd really be doing a lot of due diligence on. And we're also buying in about half a dozen to a dozen other Hobart suburbs. So Hobart's finding its resurgence in terms of capital growth. It was the best performing capital city over the last 15 years. It's had a bit of a hiatus, stagnant growth over the last 2 or 3 years, and it's really finding its feet again because fundamentally it's still a strong economy due to its infrastructure projects. Sure, the migration may not be as much as it was during the COVID or pre-COVID era, especially when the Chinese delegation came to visit it and put it on the map. But right now it's affordable, it's livable, and it's growing. Now you add to that fact that housing completions as a percent of state or territory targets. You know how the Alberta government wants to build 1.2 million homes by 2030, which is not going to happen, even they've said it themselves. But the state that's lagging behind the most is Northern Territory. The second state that's lagging behind the most is Tasmania. The 1-year target was up here, and they are failing behind a lot. So where there are not enough builders, where there are not enough houses being built, that's when supply is restricted. Demand, even if it doesn't increase, it stays where it is at a healthy, buoyant level. Therefore, there's an imbalance of demand more than supply. House prices rise. We're seeing that across large parts of Tasmania right now, including Devonport, including Launceston, and also places like Burnie or Romaine on the northern or northwest smaller regional parts of Tasmania. So there's some free content. You're welcome. I've never made any predictions over almost half a decade of content creation where I've picked an area that would grow that ended up not growing. Be skeptical, do your own due diligence, but hopefully you're grateful when you pick the right suburb from this episode and make money in the next 12 to 18 months and beyond. I want to leave you with one last reflection. Instead of tying your confidence to competency, you can actually peg it, you can consciously link it to your intention. You know, when a lot of us, we may enter into a room and we might be overwhelmed with the personalities in the room, maybe a presentation at work or a work meeting, and we're lacking confidence because we don't believe in our talents or our skills. We think other people are better than us, or extrapolate this to any scenario in life. But if you switch it and you tie your confidence level to your intention, then you can be really confident if your intention is pure, if it's out of growth, if your intention is to serve, it's joy, it's to help others. Whereas if your intent is out of greed, or if it's out of anger or envy or ego, then that is not a pure intent. If you know you've got a pure intent, you can link your confidence to that and therefore be confident in anything you choose to pursue, including property. You know, maybe you're a husband, maybe you're a wife, maybe you're a father, maybe you're a mother, and you want to take care of your family, and you see real estate investment in Australia as a plausible, viable, low risk way to achieve financial freedom or some security, you know, for your family, financial happiness, early retirement, whatever it means to you. But you lack confidence because you don't have the skills or experience. You can transform that lack of confidence, peg it to your intention. Your intent is pure. It's not like you want to get a fancy Ferrari or a mansion to show off to your neighbors or your community. You just want to take care of your kids, make sure they have a better future. So if you're clear about your intent, then that intention creates that fire in your belly and that intensity, and your confidence can surf on that wave. And there you have the wherewithal and desire to then learn how to do property investment properly, even if it may seem a foreign concept to you, and feel the satisfaction later of retraining your mind. So not only will you succeed in property investment, but all other facets of your life through this new decision-making framework, this new confidence framework. My name's PK. I hope you got value from this. Hit the subscribe button, give it a like, and I'll leave links below so you can find out more about me. Thank you so much for being with me.